Hey everybody, welcome to our weekly podcast. My name is Patrick Tan, General Counsel for ChainArgos. With me as usual every week, our CEO Chief Data Scientist Jonathan Reiter. We had an interesting question in the comment section, not a bot this time. What are the photos in the framed pictures behind us? We'll keep you guessing. More on that next week.
They're not photos, clearly.
Oh, sorry. What are the pictures?
Okay.
What
Yeah,
are the pictures
okay.
in
Clearly
the
not photos.
in the frame? We'll tell you next week.
Do you think those are photos? You need a better laptop.
So anyway, this week what we're gonna talk about? We're gonna talk about OP_return. Am I saying that right?
Yeah, I guess that's how you pronounce it. This is the Bitcoin opcode debate.
That's right.
It's very entertaining.
Samurai Prosecution. No, we're not going after ancient Japanese ninja equivalents. It's about the Samurai Wallet people. And then Renzo, the restaking protocol you may or may not have heard of. Let's just jump straight into OP_return, the op return thing. This is pretty technical. I had a quick read of it. I'm not technically inclined, but John, can you tell us about what's going on?
I mean, the issues are really political here.
I know.
So this is another one of these protocol changes proposed
To Bitcoin?
Bitcoin to make it more able to do larger messages.
Sure.
Something has a small message size limit, and that prevents how much data you can record there. Fine. And there are people who think that's correct because you shouldn't be using this for other things. There are people who want to store other information. This is an old discussion.
This is an
But what's happened here is
debate,
particularly interesting. So the code is hosted publicly, GitHub repository. Anyone can fork that code, take a copy of the code, make whatever changes they want to, launch their own fork of the network. Nobody's disputing that. Actually, we'll come to that licensing issue and something else later. But that, the main Bitcoin development is done in this single place, and people discuss what changes to make, and sort of the code is maintained there, such as it is. There are other clients, whatever. So here, a proposal was made to change the limit to unlimited, basically, to a higher limit for this particular value. They would let you store more information there. Okay, this is a standard thing that's been proposed repeatedly. What's interesting is the politics of what happened. So very roughly, a developer was sort of told by their employer, I'm going to do this, the simple stylistic version, right? A developer was told by their employer, make this proposal and pretend that it's nothing to do with any kind of business interests. And there was a lot of resistance, and eventually it turned out that somebody was paid, whether it's their full-time job or consultant, whatever, but somebody was paid by their employer to do this and pretend it wasn't from their employer. The core thing here is that a lot of the Bitcoin miners whose revenue is derived from a mixture of fees and selling the coins they mine, right? And many of them don't sell the coins they mine. A lot of the American companies publicly say they won't do that. The fees are their income. So they would like anything that increases activity on the network to increase fees that are paid.
Of course.
Right?
Yeah.
So the more things you can do with it, the more fees in principle you'd collect short term. There are people who believe that long term that's bad for the use of the network as a store of value or whatever. And people who think that the fees don't matter for reasons I still don't understand, but whatever. I mean, the fees are cash flows. They must matter to some extent, right? They can't be totally irrelevant.
Yeah, that was what I was thinking.
Yeah. But maybe they're not the key feature, whatever.
Not everybody works for money. Yeah.
Yeah. Well, no, but it's a payment network, so all
I know,
payment networks
exactly.
need to
I
cover
understand.
the cost of
Exactly.
operating the payment network.
It's
Anyway.
exhausting.
Yeah. So that was interesting in that it turns out that companies are not only directing the sort of development in ways that aren't really aligned with the vision of most of the people who seem to think they speak for the vision of the protocol, but not even being honest about it. And then there were issues with, on the discussion section of the code, whatever, repository, people moderating, deleting comments, and hiding disputes. And sort of just it's totally standard politics, right? So what you're seeing is that it's completely standard politics. That system does not have any kind of self-upgrade facilities at all. There's no on-chain governance. We've talked before about how sometimes on-chain governance is a bit fake.
It
So there's just a
tends
team that
to
has to
be
write
a
the
little
code,
bit
but
fake-ish, yeah.
But here there's no pretense that this is done in a on-chain fashion. It's public in the sense that the code is visible, I suppose. And there's just straight up normal politics in public because there's a fairly large number of people.
Normal politics seems like a
small
broad
number
tent
of
these
companies.
days.
Well, look, I mean, people aren't literally stabbing each other in the back on the parliament floor, which was totally
Yeah.
standard for a long time.
Yes.
Knives are not a thing for a while. So that's interesting. The mixture of dishonesty and the sort of fracturing of interests. It's not clear how this is going to go longer term, but
I think it was characterized as the corporate interests have co-opted Bitcoin or something like that. That was how it was coined.
Ben Hunt thinking a long time ago about how Wall Street will just. This is not the financial institutions. This is the Bitcoin mining companies. Yeah. You're seeing
Corporate
some
interests, yeah.
sort of. We discussed in the SEC custody hearing thing a week or two ago about how some of the sort of generic financial services corporate interests are trying to take this over and say, actually, all transactions should be within our own ledger and trust us to keep track of all your assets, and everything
Which
else
is
should be banned.
the existing system that we have.
So you're seeing here a similar. The actual purpose of the network is to generate fees for the people who operate the network, right? Is it a system is what it does. The purpose of a system is what it does. These are people whose attitude is that the generation of fees is the core point of this thing. It may or may not be true that if it doesn't generate sufficient fees to incentivize operating the network won't continue running. But whether or not that's actually what most users want is challenging. It's a weird situation where you have companies that need to operate a network, and the users who want to use the network don't believe that paying the companies to operate it is a good idea. They don't want to pay them directly, and they don't want to pay them indirectly.
They don't want to pay them.
They just want the money to come from selling tokens to somebody else. But then the investors in the companies seem to want them to not sell the tokens. That's the
the
I'm not
tension.
saying any specific person is being inconsistent, right? I should be very, very clear about this.
Yeah, that's true.
We're saying that the people who are generally investing in a lot of these mining companies, look at what happened with MicroStrategy. That's a company that's buying and not selling, right? Lots of these. You have the investor base there wants to finance the construction of these payment networks without ever selling the tokens. So I just throwing equity in, I suppose. Those companies whose investors do not want them to sell have a massive incentive to try to collect some fees, at least, so they have some kind of cash coming in.
Otherwise, how can you keep the lights on?
The actual users of the system don't want any of that. The end
want people to
users
sell.
of the system want a system that does not support complex programmability and has whatever level of fees the market sets. They'd like it to be low, but whatever the market sets is fine. And most of them don't want alternative uses, this inscription stuff and the NFT schemes that have come, all that stuff. They don't want any of that. And those two groups are presumably different people. It may be somebody that says, I want to invest in Bitcoin mining companies that never sell their tokens, and I don't want the network to explore alternative use cases to generate cash flows for my Bitcoin mining investments. That's a genuinely inconsistent position. I don't know that anyone holds that view. I suspect it's two totally separate groups that hold these inconsistent, sort of opposing views, and they are the two main forces here. We'll see who wins out, right? On a very basic level, if the users disappear, well, then the system's not used. But that doesn't actually mean the price drops.
Yeah.
Right? If the miners disappear, that doesn't mean the price drops either. Right?
Yeah, I mean, everybody's just holding and not moving.
Yeah, I mean, the mining companies could go under, sell their tokens to somebody else, and just the network is just a bit smaller, and that's that. That doesn't actually, there may be price implications, but it doesn't not directly tied to anything as long as the system's
Yeah, I mean,
operating.
if everybody's holding on to it as like a store of value anyway, and not a medium of exchange, which seems to be how this thing is playing out, then you don't really need the network to move anything, because anybody who acquires it presumably isn't going to be making as many transactions.
Well, you would generically think if usage just stopped, that eventually the price would just stop. Go to zero. If there was no usage.
Yeah, but I mean, if there's no usage, it means that there's no trading as well.
It would make no sense if many of the miners disappeared, the hash rate dropped dramatically, usage dropped dramatically, and the price remained where it was or went up. That would be weird, but there's no actually direct mechanism connecting those two.
Yeah,
things.
I mean, well,
it's not like the yield.
Well, you could end up in a situation where MicroStrategy owns like half the Bitcoin, and some custodian owns the other half of the Bitcoin. The Bitcoin never moves, but then people keep trading on top of it. Derivatives.
They could not trade very much, and as long as nobody buys or sells, the price doesn't change. That's definitely possible.
Yeah,
it's a complete zombie market is a thing that could happen. I mean, you have companies where the float gets to be relatively small, activity starts to dry up. Usually somebody comes in and LBO's the whole thing. There's an underlying business with cash flows. If that company at that point, or those companies, were then to try to stick a bunch of use cases on the generated fees, I think they'll have already burned the users. And so that isn't going to work here. Whereas you can take a poorly performing factory, LBO it like that, rearrange and spit it back out. I don't think this will work. So these two groups are going to have to come to some kind of accommodation, or this is just going to get more contentious.
I think I'm going to vote for the latter, because historically that's what's happened.
Yeah, no, and these do actually seem like, if the people investing in the Bitcoin companies have a mandate from their investors to do so, they have no ability. And the way fund managers work is they have a whole bunch of mandates out there to try to raise money to do different things, and whatever they get money for, they follow the mandate of that fund. And if people are investing in Bitcoin miners, or the Bitcoin miners themselves are raising money from
Yeah,
investors,
yeah.
saying they're not going to sell the tokens, those people are just going to keep doing that because they keep getting money.
Yeah, of
And
course.
they don't have the ability to change it. The fund managers may have zero ability to change it. The companies have a limited ability to change it.
Mm-hmm.
So it's conceivable, if whoever's putting money in that is totally disconnected from the user base, that those things just run off in different directions, and this gets worse and worse.
Yep.
It's different than the block size wars,
Yep.
because there weren't, listed company, heavily regulated.
You didn't have such
traditional fund managers
clear
with strict
factions.
rules.
Yeah, you didn't have such clear factions where you could
Well, there were
delineate.
clear factions, but they could change their mind.
Yeah,
All
yeah,
the
no, yeah,
participants could
correct.
just
It
decide.
wasn't as structured. I guess is probably what I was looking for.
A lot of the companies here really have quite strict rules they have to follow
Well,
because they promised.
hey, you wanted institutional adoption, you got it. So
It is interesting on the mining side to see that, and they're just the general network operator side, the staking business, people raising money
that's
to
right.
invest in
I
staking.
mean, be careful what
projects, all that
you wish for, I
stuff.
guess.
Because they can't. You can need a board resolution. The shareholders have to change your strategy, and that's a. We'll see what happens here, but if they piss the users off enough, I mean, no business survives without any user, right? You need somebody to pay.
Presumably, yeah. Okay, moving on. Samurai prosecution.
Okay, this is fascinating. Okay, so we talked almost exactly a year ago.
About a year ago,
A little bit of a
yeah.
year ago. So Samourai Wallet was a Bitcoin mixing service that they arrested some of the developers, charged them with, if I remember correctly, conspiracy to commit money laundering, maybe
That's correct.
also money laundering,
Yeah,
and
yeah,
then unlicensed money transmission. And the general point that we made when we talked about this a bit over a year ago is that insofar as they have transcripts of these people saying, we would like to build a service to help obfuscate flows, and we know criminals will use it. Read the transcripts. That's, I mean,
Yeah.
this is well established in our previous, that we seemed pretty comfortable that if they went forward on those charges, that was a job done
yeah.
type situation.
Yeah.
I've been through their code then, and I did a quick refresher. Nothing's obviously changed. They haven't updated the system because they were, I don't think anyway, it hasn't changed.
Inconveniently predisposed.
Well, anyway, hasn't changed. They did not have the ability to seize user funds, but they did run a collection of very centralized coordination services that were essential to the operation of the obfuscation platform, but they didn't actually have the ability to take people's money. Right, and we specifically talked about how it seemed like it was a mistake by the government to push the second point because they could lose and still convict the people for the stuff that, again, it seemed pretty clear, as long as, usual caveat, we're assuming the FBI hasn't faked the transcripts, assuming all of that stuff is just correct, that they did that. The code was well enough commented to explain that their coordination servers were even built into the system as the default for people who didn't know how to configure using different services. So they were definitely involved in intentional obfuscation they expected to be used by bad people. Fine. Now what's happened is, it turns out internally, one part of the government had an opinion that maybe these guys weren't engaged in money transmission, or that the app wasn't engaged in money transmission. Whether they understand the difference between the app and the back end is unclear. That agrees with us. So part of the government, contemporaneously with the content, agreed that maybe one of these charges isn't a very good idea, because whether or not, I believe the way this is, when it was actually written, is whether or not they sort of did this, we're not really sure we can convince a jury to prove this at all, which is what really matters. You have to be confident you can convince a jury. There is an argument that their service was a money transmitter, but I don't think it's a very strong one, and I don't think it would convince a jury.
Correct.
I think there's a sufficient defense. We said this before.
Yeah.
Yeah, well, they didn't disclose that memo to the defense.
Yes.
Now, while I think we're definitely experts in how the on-chain stuff functions, and we're very familiar with the adjacent legal whatever terminology, the Brady disclosure requirements.
It's a Brady violation.
That seems like, but that's not a thing we're experts in. That just
it feels instinctively like a Brady violation.
Now, whether they're going to claim this was an internal legal discussion, I have no clue.
I think that would be challenging.
So Brady violation. So this is in the U.S. the government's required to give over any and all potentially exculpatory evidence to the defense. There's a much more technical explanation and set of rules, and you go and find that yourself.
That's pretty serious,
but,
though.
It seems like the fact that parts of the government weren't sure they had a case on some of the charges, agreed. I don't think they have a case. And they clearly should have. Now, probably what happens if they weren't given that evidence, I don't know if just that charge gets thrown out or if the whole case gets thrown out or what happens.
Yeah, it lead to the thing
it
getting
depends
thrown
on
out.
exactly what happens.
Yeah.
The whole thing might get thrown out.
Yeah, the whole thing might get thrown out, and
so-
then it doesn't mean that you're and then it depends on whether or not it gets thrown out with prejudice or without prejudice. And if it's without
Well, that
prejudice,
count will get definitely.
yeah,
prejudice. That's gone.
So if it does get thrown out with prejudice, it means that they can't bring a.
I don't think that Brady
can't
stuff
bring-
gets dismissed without prejudice. I think it's.
Well,
just-
I don't know. I don't know. Like I'm not an expert, but if you get thrown out with prejudice, you can't bring a
So
second. You can't have a second bite of
It
the cherry.
seems reasonably likely that the stuff we thought these guys didn't do, the government isn't even going to be able to charge them with anymore. They never should have in the first place, we think, because it's just wrong. Whether or not they're going to be able to charge them with the stuff that they almost certainly did do and can prove easily, they may have screwed it up so they can't even do that, which is not great.
It's not ideal.
That will be portrayed as a win for software developers when in fact it's not a win for software developers. It's just, I mean, everyone should be unhappy the police are operating incorrectly. The police, the prosecutors should be unhappy that they're hiding evidence from defendant. That's just not the system. So like,
It's not OJ, but it's not good.
no, it's not. And this happens in mistakes, whatever, and but like it's not. Yeah, that's not good. But a dismissal of the entire thing because of this,
It's really stupid.
I don't think it's fair to call it prosecutorial misconduct because we don't
No,
know
it's
what
n-
happened.
yeah.
But this potential related misconduct is not a great situation.
But because I mean, given that you had the transcripts, you didn't have to do this.
Yeah, they could have just focused on the stuff we told them to focus on, and they wouldn't have any problems at all.
But such is life.
And also, as noted, you can normally turn a count of money laundering into like 500. This is an arbitrary number of counts, number of transactions, so they should have had enough leverage. I still think some of these people don't understand how these systems work and don't sort of get what's going on.
Renzo,
Yes, okay. So we talked about Renzo also a while ago. Renzo is a restaking protocol. So the first interesting thing to note about Renzo, let's just take a look here at, okay, well we'll do this one first and then so
the other one.
that one. So this is activity in a Renzo token. As you probably expect, these correspond to airdrops of various times. So this is because of the initial allocation, later allocations handing out of tokens, right? Not so much action there. So Renzo is a restaking thing whose terms say that it's not available in the U.S. to U.S. users, U.S. citizens, U.S. residents, anything related to the United States or maybe minor outlying islands. Okay, well, among the other interesting things you'll notice if you check out who uses this thing is that Coinbase is pretty active. Coinbase, you see right here. There's some other Coinbase further down. Most of these Gnosis safes are team wallets. But what matters here is that Coinbase is the top user of the thing. So a protocol that says that they're not available in the United States is actually now listed. It wasn't originally, but has subsequently been listed on Coinbase.
Protocols may be not available, but the token is.
Well, okay, so now let's move on to step 2. So the token is used for protocol governance.
All right.
So you can't argue that have people who are Coinbase users, participate in the governance process and stake the token. Let's take a look here. You can see, get this one as well.
The other one, yeah.
So this is the balance in the staking contract. You can see that there was some action and then it's subsequently come back down a bit, whatever. So I don't know if this is the most successful staking protocol that's ever existed. But yeah, this is another case where if you look here, by the way, we go back, you can see there's a price chart, I think, in here somewhere. And you can see it's been essentially one way on the price. Token unlocks, token gets sold, token price goes down closer to 0, right? We're 1 cent from. So it's fallen by over 90% beginning alongside the staking dropping. So now, if there were to be a issue with it having been offered in the United States at some point in the future, people who bought the token and the price dropped might be able to take some action on the basis of the misrepresentation.
Mm-hmm.
I would also note that the person who set up the protocol and has spoken publicly about it a number of times is apparently based in the United States.
San
And the
Francisco.
team controls a lot of the tokens. The team is not very large. If you look at the code contributors, there are not very many people. So it seems unlikely that banning U.S. persons was ever real and that was always a sham. Because if the guy writing the contract was transacting in the protocol from the United States at the time he wrote the contract or put it on the website, I mean, you can't be more sham than that. There was also, and this is an entertaining bit, I don't think this is in the notes here, Kelp, DAO, and Renzo had a bit of a dispute over why they had basically the same code and who stole whose code from who, which is pretty funny. We don't have an opinion on who stole whose code, although Renzo does seem to have a slightly better case given they had some audits predate. Whatever. It's interesting that Renzo's code is not open source. it's readable, but they're using a license that restricts commercial use, much like Uniswap v3. And this is a thing that's come up for a while now, where you'd say to yourself, like, well, you can steal my code if it's open source.
Yeah.
Generally, that means it's you freedom to fork, you can use by other
Correct.
people. Whether you have to contribute back, whatever all the restrictions.
different story.
But no, they only allow non-production use of their code. So that's not. No one believes that that's what open source means.
It's a strange definition. I'll give you that.
Yeah, and then they're not going after these other people, at least at this point, if they've maybe lied about their geo blocks or whatever themselves. It's just an interesting situation to see a token block a country, be listed on a major exchange in that country, have the founder be in that country, and then to have a token that's so clearly one way with a staking operation that's one way. This seems like a one-way train to, well, I guess in the old days we just said SEC town, but it seems like there will eventually be a problem here because that's just
Reparations.
really not okay.
All right.
So it's
Reparations.
funny, at least. I don't know if there was another. Oh, and you can just look. I guess we do very, very quickly here. So this is this is for the staking address. You can just see that the number of stakers is quite large. Remember, the price has dropped 90-something%. So these amounts seem small now, but they were bigger when the tokens went in. Right? There's huge numbers and lots of various exchanges all over the place and whatnot, deposit addresses, and just a huge number of people involved. So it's not while the number of dollars may not be very big anymore, this one seems to tick all the boxes and have no real creativity. All parts of the governance process are also EOA controlled, so it's not actually full on-chain governance. The team wallets and whatnot that have most of the voting are not. They're just EOA controlled. So that's nice.
And on that disappointing note,
It's not disappointing.
And on that note, thanks for tuning in. Thanks for all the likes, comments, subscribes. I promise you we'll tell you what the pictures are about next week. Until then, have a great weekend. We'll talk to you again soon. Thanks for tuning in. Thanks for all your likes, comments, and subscribes. We appreciate it. See you again. Bye.